presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hey, Robert, how you doing, man?
Yes, good, and thank you for taking my call. I wanted to let you know that I've been a subscriber for a couple of years, just different members of your team, and I really enjoy it. But really the reason I'm calling is to express my sincerest gratitude for you providing that information yesterday on the small business grant. I'm a small business owner and primary breadwinner for my family, and if I can get that money, it's going to really mean a lot to my family. So
that's awesome.
Thank you for taking the time to do that.
No, well, listen, man, we appreciate you growling and prowling with us.
Now, Tom O'Brien.
Okay, we're back, folks, and we're going to start out with letting you know that this is Larry Pesavento setting in for Tom O'Brien today. So Tom will be back with you on Friday, but I wanted to go through some of the markets that make these things move. We're going to start out with the U.S. dollar index. As you can see here, this market has been going up until October, a beautiful ABCD pattern. You can see it right there at the top. That's known as a 3 drive to a top pattern. Then we have the lower highs. That's known as the 135 pattern. And then we have the 382 retracement here. And you can see we were setting right there. And then we looked like we were going to take it out on Wednesday. And then, of course, Wednesday's news came out. And you can see what's happened between Wednesday and Thursday, a breakdown of this level. This is extremely important, folks. This is telling you that we've had a major top in the U.S. dollar. And that means speculators are coming back in force. The reason why, if they're not worried about the dollar, they got to put their money somewhere, so they're putting it in stocks and bonds. I think it's the wrong thing to do in bonds and the wrong thing to do in stocks, but that's just my evaluation. I just look at it from a chart's perspective on how much I have to risk at any one time. But the fact that this market broke down right here, the only chance that it has is that if it reverses by tomorrow, and that's Friday. We've got a jobs number, of course, and that could make the markets move. Not as much as the Fed, because when the Fed says something, everybody thinks it's gospel, and away they go. So that's what we're watching here in this market. Now, this market, folks, just to give you an idea how big it is, the U.S. dollar index is composed of about 20 different currencies. About 53% of it is in the U.S. dollar versus the euro. And then we've got the British pound, the Japanese yen, followed by the Canadian dollar, the Australian dollar, Swiss francs, et cetera, et cetera, et cetera. The smaller countries don't really mean very much in here because the bulk of it are the big four markets that we pay attention to. And those markets have been rallying also. We're almost up about 5 handles now, $5,000 in the euro just recently, because as the U.S. dollar drops, the euro goes high. Now, just to give you an idea how big this market is, this foreign exchange market just in the euro alone is $1 trillion. That's more than all the stock markets and bond markets in the United States combined, by far. If you had, Japan and England and some of the other places, you're going to see that this is a huge market. This is how they, value the things that they buy and sell. If you buy a hammer that's made in China, it's got to be converted into U.S. dollars, back into renminbi, or the Chinese yuan, which is the same name. This is what you have to do. So, and it trades beautifully, folks. You don't have these really wild gyrations like you see with the Fed. Now, yesterday the gyration was so big because the chairman said, well, maybe we'll start reducing rates or the rate of change in December. He didn't say he was going to, he just said he might. But when he put the word might in there, that's all traders need to do, and away they go to the upside. Now, speaking of upside, what I wanted to do now is just to share you what I was looking at in the stock indices as we came into today to see what was possibly happening. So if you'll give me 1 second, I will get that chart up, and we will take a look at it. Here it is right here. This is the E-mini S&P. It's a 4-hour chart which covers the last 10 weeks of trading, which is certainly enough to give us an idea of what we're looking at here. We'll put this up here so we'll be able to see it. You'll be able to see the low that we made here in October. this October the 13th, right there was a giant ABCD on the daily charts. And so that was sitting right at a major support. We rallied up. We pulled back just about to between the 38 and 50% retracement. And then the target on that measures to 41.26, and we got to 41.19, I believe, today. As you can see, we had this small 3-drive pattern on a 4-hour chart also up in this area. So we're going to have some resistance back here at this old level here, which is at 41.65. And if you'll remember, that is the big 61% retracement of the whole move down. Now, 61 is one of the major Fibonacci numbers we use. On retracements, we use 618 and 786. On expansions, we use 127 and 1.618. And when we have a perfect AB equals CD, that's equal to 1. That is the formation of the pattern that Mandel brought to us, that told us that fractals are based on ABCD patterns. He did thousands and thousands of these before he wrote his book on behavioral of stock market action, known as fractal analysis. Benoit Mandelbrot, the father of fractal analysis. Now, this was also covered in H.M. Gartley's book in 1937 on page 249 and 250. He also described that same fractal that Mandelbrot has, only Mandelbrot called it the lightning bolt, and Gartley called it the AB equals CD. So those are just a few of the historical things from looking at charts that I've learned, over the years, but they all add up together. Now, I wanted to mention to you just a couple of things here that are happening in the markets that, really will affect us a lot, not just because of the fact that we're having these big moves in some of these other things like silver and gold and things like that, but I wanted to show you keynotes, folks. This is a market that I have personally been bearish on for several years, even when they were telling us that, the interest rates were going to zero. Now, look what happened. We had this big bottom down here. And I said at that time, this was about 5 or 6 weeks ago, we're going to see the strongest rally we've seen in this whole down move. And folks, with today's action, that is exactly what's happened. We have broken above this level right now. Now, the Treasury bonds are up over $11,000 a contract, and the Treasury notes are up about $7,000 a contract, and they're still going. Today, they're extremely strong. Nobody wanted them here, but everybody wants them here. Now, isn't that strange? You got to buy them when they're crying and sell them when they're yelling. When they were down here, they were crying, and here they are, they're yelling. So they want to buy them now. So get ready to hand it to them, because this is no more than a short covering rally of this big move down here. This is the largest move right here, folks. This, believe it or not, this is the largest rally we've had in a long, long time, since way back in here somewhere. So this market, how high it's going to go, we'll have to wait and see. We're going to take a break. We'll be right back. 877-927-6648.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, this is Larry Pesavento setting in for Tom O'Brien today. Tom will be back with us on Friday. I posted the chart of the Treasury bonds. We've discussed the Treasury notes in the previous segment, but I wanted to sit down for a second here and talk to you about the Treasury bonds because they've also had a huge rally coming off the bottom. Now, you'll notice here that we've cleared the 382 retracement today by getting above the 129 level. We almost hit 130. Now, the low that we made back here was at 117, folks. That's a $13,000 move in just about 2 weeks. Now, we expected this move to happen. It's happening as expected. Now, how high is it going to go? We don't know. But this is a short covering rally in the interest rate market, and you're going to see higher interest rates. This is nothing more than a bounce. This is not the start of a new bull market, but we could get a move even substantially higher, way up into the 140s and maybe even 150s in the bonds. We don't know that. All we're watching to see that we went through the 382 retracement, that tells us that it's going to go a little bit higher. How much higher? I don't know. The next level to look at up here is at 132. So as a trader, you're saying if it doesn't stop at 128, which it should have, and it goes above that, you don't want to stand in front of that. It's not how much money you make, folks. It's how much money you don't lose. And that's the real key, to trading. Focus on like you were a slot machine and thinking that you were basically looking at a market that was going to be looking at something that would be quite a bit what we call speculative, as you want to say. But you want to be able, when you go into a slot machine, you want to think like a slot machine. Only put $20 in it, or whatever your limit is. Nothing more than that. Sometimes you'll get lucky, but most of the time, hold on, folks, I lost a chart for a second, and we'll get this up here, back it up a little bit. My guest on my show tomorrow will be Shane Smolian, thewolftrader.com. Anyway, you notice here we've got this market coming up here that could go a lot higher. Now, whether it will or not, I don't know, because we've been up 3 weeks in a row now. That in itself should tell us we have a little bit of a correction. So those are one of the things. I want to switch over for just a second and go into the gold market because we had a very interesting thing happen in gold on last Thursday. I want to get this up here so you'll be able to see this. And we were fortunate enough to get this position on, and we'll be able to look at it right here. Okay, here is the gold. You'll notice that we made a 382 retracement here on Friday at 17.25. That was our buy point. The low was 17.19. And now we've gone almost $100 higher, folks. We're way up into this area right here. Now, did we take all of that? No, we took a piece of it. We left some money on the table, but everybody leaves money on the table, folks. Remember those 4 fears. One of them is fear of leaving money on the table. Everybody leaves money on the table except one person, and that's the person that gets that low tick or the person that gets the high tick. That's the only person that doesn't leave money on the table. So you've got to shake that off. We had a similar move today and yesterday in the crude oil contract. We were able to watch these ratios. We know it as the Fibonacci ratios. 382 is one of them. But I wanted to just point out to you, those of you that don't believe in the mathematics of the market, is if we take a look here now, we're going to look at this is nothing more than a 15-minute chart, because I send these out to alert people, you know, where they are supposed to be. Now, here was the real bottom. This was the big ABCD, new lows on the year, you know, setting right at the 61% on the daily. This is right out of my newsletter, saying to look to be a buyer of crude oil down around 73. I believe the low was 73.68. We went $10 higher, folks, in a matter of 4 days. The first retracement, you can see, went exactly to the 382 retracement. The second one was the 382 retracement of the low. Now, you've got to make this. You've got to check to see what these are. You see, that's a 382 of that, and it's also a 382, a 61% retracement. So you have 2 Fibonacci numbers setting there, and it looks absolutely great. The market rallies, pulls back to the 382 one more time. Okay, and then what happens? The oil inventories came out and were just spectacularly reduced, making the fire under the bulls red hot, and it took off, and we went up another $6 from that level. Again, we did not take all of it, but we took a big chunk out of it. That's what my goal is to not lose very much money. Remember Warren Buffett, folks. He has 2 rules in investing. Rule number 1 is don't lose money, followed by rule number 2, which is don't break rule number 1. Well, believe me or not, in order to be a speculator, you have to break rule number 1, because you're not going to be right all the time. You just want to remember that it's not how much money you make, it's how much money you don't lose. That's the key, you know, to all of this that we're paying, you know, so close attention to. Now, I wanted to bring one other chart together to you folks. This is actually from a few days ago, but it told you when the market was getting ready to break out. And this is the tech indicator, which is the NASDAQ. And as we get ready to look at this one here, you'll be able to see this is where we were. Now, you'll notice what we had happen on Monday. We had a nice sell-off, and then right into Tuesday morning, early Wednesday, that's when the Fed came in right here, and then it exploded to the upside. So that was another reason. Once you went above this level right here, which was Friday's high, it was telling you that, you better stand outside of that, because it's no longer working. And especially after the Fed talk, the liquidity dries up many times. That's why you see these tremendous moves. There's not just a whole lot of buying and selling in there. A lot of it is just bids. In other words, people trying to buy. And there'll be one trade here, one trade there, one trade here. Not a lot of volume, but a lot of bidding going on. And the same thing on the downside. You get markets, people wants to sell, and the guy says, to who? Well, they just keep selling. So that's where we're trying to keep an eye on these things, because as a trader, you want to keep your losses as close as you can to your vest. Remember, folks, you can make a lot of money being at 50-50. If you throw in some patterns and Fibonacci ratios, you're going to get closer to 65, 70, and maybe some people get even higher than that. But remember, at 50%, you can make a really good living. One of my guests on my show is Jeff Hughes of Alpha Insights. He's only right 30% of the time, folks, and he knocks the ball out of the park. I mean, he has tremendous wins. His wins are 2 and 3 times what his losses are. And that's because he manages his money properly. And that's what we try to do when we're doing the trading, is to keep these losses small and let our profits run. Whether we're able to do that, I don't know. Now, when we come up to the next segment here, since I don't get you folks very often, I want to share with you some of the things that I learned here in this office in Tucson, Arizona, when Mark Douglas and I worked together from 1996 to 2004. 2005. He was here for, let me see, 1, 2, 3. He was here for 5 years, and we had 6 years. 6 years. He left in 2002, moved to Scottsdale, and he was there for another quite a few years, 10 years before he finally passed away. Unfortunately, back in September. 5 years ago. My goodness, time goes great. We'll be right back. 877-927-6648.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, folks, this is Larry Pesavento setting in for Tom O'Brien. I want to change strategy here a little bit because I don't get to do this part of the show very often. I know you're different types of traders here. Most of you are, of course, in stocks, and I know you're gold traders, and this has been an incredible week for us. We want to continue to see what's going to happen. We're due for a correction right now, but whether we get it or not remains to be seen. I want to talk to you just a little bit about what I learned when I worked with Mark Douglas here. Mark and I had been friends since 1983. Back when I was on the floor of the exchange, he had just started in the business. And, of course, I'd been around for a while, and we became friends. And later on, I happened to be a best man at his wedding, and he was a best man at my wedding. So we became very, very close friends. And when I moved here in 94, he would come out and visit for quite a few months every year. And finally, he moved here on August the 16th of 1996. I remember that date very vividly. That happened to be the same date, not 1996, but in August 16th was the day that Elvis passed away in 1975. I was sitting in the driveway. I'd just taken him to the house that they had bought, and I had their car hadn't been delivered yet, and so I came over to my house. It was a terrible storm, and I was in my driveway, and I heard this tremendous thundering noise, and lightning had hit the giant tree in front of my house, a huge cottonwood tree, split it in half. Half of it went into the street, and the other half went into the back side of my house. And it just was raining cats and dogs. Like 3 inches of rain came in the house, filled the house up with water. I mean, it was terrible. There's about a $29,000 recovery bill, but after about 3 weeks, the recovery company just made it just like nothing had ever happened. So, but that's how I remember Mark, coming here to there, but working together. But he had brought in, every time he interviewed some of these traders that he had worked with from Chicago and New York and London and other places, they would come to visit, and we would spend time here in the office, and he would go over, the psychological implications of what they went through. And he had a survey that he went through with these guys. It was really amazing because we know about the fear of losing money, the fear of leaving money on the table, the fear of being wrong, all these, there's 4 major fears that we have, but they have the same things. But the one that they had the most, these guys that were super successful, which was really, really amazing, was the fear of losing money. They feared that the most. And even though they realized that the only way you can not fear of losing money is if you get the high tick or the low tick. And it's really absurd to think about that because that happens occasionally and rarely, but it does happen. But we think it's going to happen all the time, and so you can't do that. But that's the one thing that they had to struggle with. But they had many other things that they had. Many of them were, had drug or alcohol abuse, spousal abuse, all different kinds of things they had to go through, just like many of you have to go through. So if you're trading with any of the things going on like that in your life, you got to be able to be prepared to handle it, because either that you just can't do it. I worked for Commodity Corporation for a couple of years, 85 and 86, and during that time, if you had a death in the family, okay, or you were moving, okay, then, or having a divorce, if you had any of those 3 things that were happening, you automatically were given a 2-month sabbatical with pay. Whatever your pay was in July, you got that in August. So, and for the next 2 months too. So that's pretty much, what they did. They knew psychologically, so they had a full-time psychologist, on the staff, and if something went wrong with a person's account, the psychologist sat down with you and went through the things that were going on. Now, that didn't happen to me, but other people it did, and I remember, talking to some of them, and they wanted to know why it happened. And we've got a caller from the big San Francisco, California. Ben, are you there?
Hi, Larry. Good morning. I am here.
What can I do for you, my friend?
I have 2 questions. One is about the dollar. Another is about the TLT. Last time when we bought, you suggested me to keep holding on to it when we bought it. So far, I'm up a lot. What do you suggest to take profits on it?
Yes, I would be taking profits. Now, you have 2 choices, Ben. You can put your stop right at today's low, or the second thing you could do is you could just take your profits and say thank you. I would be of the inclination, because I know you've made a lot. So I would go ahead and take the profits, and then if you get a pullback, we could look at it at that time. You could call in and we could check it out. But this has been a big move. I mean, we haven't had this big a move in over 2 years. So you've got the best move in 2 years. So I would think now would be the time to take your profits. But that's not the reason. The reason is, when in doubt, get out. And Ben is in doubt. Am I correct?
Got it. Thank you.
So you get out.
Last time you said hold on to it because we got it into a good price.
Yes, you did. That's the main thing.
Okay. Another question is about the dollar. I think 105. I think I got stopped out when it broke down. I've been buying and selling above the dollar. So what do you suggest? Like now, any support levels for the dollar, or
we have to wait on that, because we've broken major support now, and that major support had held for 4 weeks, and all of a sudden it's broken mainly because of the news of the Federal Reserve. But what you have to do, man, is, think like, a slot machine is how much money can I lose, not how much money I can make. So you don't want to keep trying to pick a bottom. You've got to wait for some type of a ratio or a pattern or something there that'll give you a place to enter. And we do not have that now in the U.S. dollar. With that breaking down of the lows that we had last 2 weeks, that suggests that we are still going to go lower. It might not go much lower, but it just says we should go lower.
Okay. So the last question, Larry, I would appreciate, should I sell my spiders? Last time you told me if you have it, hold on to it. I think 3,800 back in September, where I think I bought it into that ABCD pattern, and then since then I've been holding on to it.
Well,
so should I sell it now, or still you think we can go another Santa rally till 410, 415?
Well, I think you answered the question again, because you have a doubt in that, and so I would definitely take that out, take that one off too, and wait for the next pattern and something else to trade, or even wait on something like this. But I think again, you want to be taking care of profits, and so that's what I would be doing here, is just taking some profits in it, because you do have a doubt, and when in doubt, you should get out. That's the number one thing on this portrait that I have behind my thing. When in doubt, get out. So there's a doubt. So, either that or put your stop in real close. And because you have that doubt, I would say just go ahead and exit.
Okay, got it. Yeah, the reason is that everybody talks about Fed is now dovish and they might cut rates on the stuff. So I was thinking probably we might go another Santa Claus rally or something like that. Yeah. So that's why I wanted to confirm with you.
Trade what you see, not what you think, my friend, because thinking gets you in trouble, because you can't outthink these markets. You got to be able to look at them and say, by golly, looks like we're getting ready to go higher or lower, but you got to remember how much money you're making, how much money you're losing. So clean out the clock and get ready for something big.
Got it. Thank you.
Thank you, man. Thanks for calling in, and happy holidays to you.
You too. Bye.
You bet. We'll be right back, folks. 877-927-6648. Larry Pesavento setting in for Tom O'Brien.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Okay, folks, this is Larry Pesavento setting in for Tom O'Brien. We've had a question from one of Tom's listeners, and that is about the silver market. I do things a little differently than Tom, but I posted a chart of silver, and as you can see, it's been in a very strong uptrend. Last week, on Wednesday, we made a beautiful 382 retracement there at a perfect bottom, and we know when we have really strong trends, that's where the 382s come in handy. And as you can see from the prices today in silver, we've gone up over $1.20 today. We're up into this area right here, approaching these levels that we haven't seen in a long time. So this is probably going to be a sustained move, but how far it goes from this level, we don't know. There's going to be some pullbacks along the way, and that's what you want to do, is sort of watching these pullbacks. I hope that answers the question for the listener. Now, I want to get back to a little bit about what happened when I was learning to trade, and I'm still learning to this day, folks. One of my big experiences was meeting Amos Hofstadter in 1970. I met him again in 72 and also in 73. 1975, he was killed in an automobile accident down in January down in Florida, where he had his winter home. And he was still going strong in his 70s. He was 77, I believe, at that time, and still learning computer programming and everything. But on his desk, I was in his office a couple times over the years, there was a little plastic, actually it was wood and plastic someone had made for him. And there was three things on that plastic thing, and it said, 1, is this a valid signal? And number 2, it says, how much do I have to risk to see if this is correct? And number 3 was, if you can accept the risk on this particular trade, you must take the trade. And the reason is, the second part of that sentence was, you will never know what is going to happen next. And the faster you learn to believe in that principle, the better off you're going to be. That was from Amos Hofstadter. Now, Mark Douglas, who was a big fan of Amos Hofstadter, had something like that on his desk, a little more concise. But I'll bring it up here so you folks can see it here. This is a picture of it. And this is Mark's version of what Amos just said here. And as we get to look at this, tell you more about trading that you want to know. And that is, when you're trading here, this is what's so important now. When you really believe that trading is simply a probability game, concepts like right or wrong, win or lose, no longer have any significance. And that's the real true part of this, folks, because when you realize that, the only thing you can do is to control your risk. You don't know what profits you're going to have. You'd like to have a lot, but you don't know that, do you? And so that's what you have to learn to do, to be a trader. And the main thing that you have to have, and this is what these traders told us, is a foundation of absolute trust in what they were going to do. They really believed it. How did they do that? They acquired a skill. And that the skill is what's really important, because skill is 2 parts to it, as Mark pointed out. One is you have to perceive that you have an opportunity, okay? All right? And the second thing is you must have a precise methodology to take advantage of that opportunity. So that's what we try to do, is to find out these little ABCD patterns and these ratios of the Fibonacci summation sequence, of which is part of sacred geometry. And we have those things together. We have an idea of what a perception of that opportunity is. Whether it's going to be right or wrong, we do not know. But we have a precise methodology for entering it. That's at point D. We know if we go below point D or above point D, we know something's wrong. But you have to have that foundation of trust that you act without hesitation. I mean, you've got to do it in the midst of the sabers coming down and fireballs and hand grenades coming off. And you got to say, yep, this is where I got to play. And that's what you try to do. And now, do you win all the time? Heck no. And that's why this business works. If it won all the time, everybody would be a winner. The line to get in this business would be around the world 4 times. You know, because you work for yourself, you do what you want, you make what you can, and do your best. That's all you really can do. But the market has an unlimited opportunity to you at all times. But you've got to be able to perceive what your opportunity is, whether it's using a oscillator, indicator, a moving average, whatever it happens to be. If you can perceive what that is and then quantify yourself by asking the question, if I can take this trade, how much do I have to see if I'm right? That's what you have to know. And then when you get that, by golly, you're on your way. That's the main thing that you can really do. So remember these things. Is it a valid signal? Number 1. Number 2, how much do I have to risk to see if this is correct? And number 3 is, if I can accept the risk on this trade, then I must take this trade because I have no idea whether it's going to work or not, because nobody else does either. And that's the edge that we have, is the fact that nobody else does either. It doesn't make any difference. That's why when you go in to play a slot machine, nowhere on that slot machine does it say you can never beat me over a long period of time. And right there on the front of the machine, it says, I've taken in $1.2 million more than I've given out. Do you see that on any slot machine? No. You see flashing lights and 3 sevens or 3 cherries, whatever it happens to be, and they're trying to get you to do it. That means you can still play the slot machine, but you only put in $20, $30, whatever you can afford. Because you can beat it in a short period of time, but in a long period of time, not a chance. And heck, no one's able to do that. So remember those things. They're very, very important to have that foundation of absolute trust in what you're doing. Now, I've been working a long time. I have that. You know, I found that out in 1976. In the fall of 1976, I knew this was going to what I'd be doing the rest of my life. And here I am, how many is it, 56 years later, no, 46 years later, 56 years later. Wow, unbelievable. This is where I am, and I really like it, and I still love it just as much as I did the day that I started. So I hope you can get some information out of this, because these are things that I believe in. I try to teach them the best I can. It's not easy to teach someone, because many people will fight you along the way because they don't think these principles work. The only way you can get them to do that is to make them find out themselves that they can actually do it. You get that in 2 weeks? No. It takes a year or 2, sometimes 3 years or more to train someone. But if they're willing to do it and stick with it, they can do it. This is not rocket science, because it's just, you're just looking at charts. The fundamentals mean absolutely nothing to what's going on. You know what I mean? It's just really, really important. Now, when I'm talking to you like this today, folks, I got this for 6 years, 10 hours a day, 7 days a week, working with Mark Douglas. I mean, it was done in an environment of 2 guys hanging out, but by golly, he was the guy to hang out with, and he was easygoing, and we got along great from the very first moment that we ever met, and miss him greatly, but his presence is in this area of Tucson, and it always will be. So that's what we're looking at here. Fortunately, we've got a venue here at TFNN. Thanks for the O'Briens for what they put together here with the Trader's Den and all the stuff that is out there with the different announcers and guests that we have. We give you some good information, and we appreciate all the good feedback and also constructive criticism. So let's try to remember it. Listen, folks, Tom will be back on Monday. I'm going to do the 4 o'clock show in just a moment. So live every day in an attitude of gratitude, and may God bless.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, Larry Pesavento setting in for Tom O'Brien, and we got one of Tom's friends and fans calling in from Cedar Rapids, Iowa. Keith, are you there?
I'm here, Larry. How are you?
I'm living the dream on the green side of the grass, as always. How are you, my friend?
I'm well, thank you. Through your teachings over the years, I learned a lot from you, and I want to ask you a question about the Dow.
Yes, sir.
It looks like where we're at now versus that temporary high back in August, we're starting to form a butterfly. I don't have my instant charts available right now, but my question would be: we've gone over that high that was established in August. And we're pushing into, at least it looks like to me, the one formed in late April.
This
Am
is
I right?
absolutely correct. You got that spot on.
So the significance here would be that once we get to, say, a 1.27 or I guess the question is, we would want to see a 1.27 coming up off of that that mid-August date from the current price. Am I right? Or would we
Yes,
want to
you're
look at a
absolutely
different fib number before that?
That's correct. Now, what I've done is I posted the chart of the Dow E-mini, and you can see, if you get a chance, that we're looking at about another 500 points higher. At about 35,000, you're going to see a 78% level there. Now, in order for that to happen, the S&P has to get above 4165. Hey, listen, thanks for joining us, Keith, and happy holidays to you, my friend.
You
bet.